with our panel. Joining us now is Dana Diario of Envestnet and Tracie McMillion of Wells Fargo. Happy Friday to both of you. Dana, so we got another round of inflation data coming next week after what was a pretty tame jobs report, I guess. Small caps have been pretty sensitive to the higher for longer narrative. Do you see anything changing?
Well, I think it really is going to turn on whether we see this rate cut obviously coming in June. So small caps, as we all know, are more interest rate sensitive. It's interesting because growth is more interest rate sensitive, right? And growth hasn't suffered at all, obviously, in this rally, even though it's longer dated cash flows that have to be discounted back at a higher rate. But we have seen small caps suffer and certainly be very interest rate sensitive through the course of this rally and all through last year, and largely because they're not as easily self-funding, right? They need to go to capital markets more often. You have corporate teams that are now all of a sudden facing much higher rates than they had to in the past. So not surprising at all. I think the big question is, do we get this cut in June? And, do we indeed stick the landing? I think, all signs seem to point there, but I don't know that I think it's guaranteed.
Okay. And Tracie, you say go to quality, don't take on too much risk, don't jump into small caps yet. But if the economy is generally healthy, which the data today would suggest, isn't this a time when the right small caps with the right stories could actually outperform?
Yeah, so we've been favorable large caps for quite some time, and we're actually looking for an opportunity to move into small caps, to move into some of those riskier areas of the market. It seemed like maybe late last year might have been offering up some of that opportunity, and more lately we've also seen small caps just starting to outperform large caps. But what we want to see is more evidence that we are closer to the start of a cycle and not the end of a cycle, because small caps do tend to outperform at the start of a cycle. So we want to see things like growth continuing to expand, breadth continuing to expand, interest rates moving lower from here. And if any of those three fail, then we're probably not going to see a continuation of the outperformance of smalls just yet.
Okay. Dana, it's not. I realize stocks took a breather today. Most of the major averages are lower on the week now. But in general, we've been at such a torrid pace for the S&P, hitting record high after record high. It's not the only asset class, though, that's been doing that. We've also seen record highs in gold and this week, record highs in Bitcoin. What does it say about diversification, and what does it say about whether you should be putting something like Bitcoin in your portfolio?
It's an odd barbell market, right? I think, it's very interesting what you're raising. And, coming from Envestnet, a platform with a lot of retail investors, obviously, I have to point to the advent of ETFs. I mean, the decision by the SEC to enable spot Bitcoin ETFs is just going to be huge. And you're going to continue to see a tsunami of interest, because now you have a liquid, easily available way to earn a Bitcoin return, and it's backed by major asset managers. So folks who weren't ready to dabble in the actual currency are now going to say, okay, here's my opportunity to get a little piece of this. And it has a lotto ticket-like aspect to it, right? So there's great research out there talking about the fact that even normal risk aversion in investors allows for some position in the portfolio in Bitcoin, simply because it can only go to zero. And the skew on it is so high that, it has this opportunity to pay off dramatically. So I expect to see that continue for sure.